Katie, we can see the rates on the screen. I just wonder how many people are paying them. Katie, we haven't had the great refinancing yet. Some people maybe think it begins next year in high yield. Katie, do you think this economy can tolerate these kind of rates beyond, say, 6 to 9 months?
This is the really tough question. And I think that's what March showed us, is that suddenly it seems like people wake up and they say, wait a minute, there's a good deal for yield here, or this isn't working. And I think it's very hard to predict when people are actually going to refinance and when those particular events are either going to change their behavior. The truth is people behave differently in a higher rate environment. We've seen that shift in short-term rates. We haven't seen it in high yield. We haven't seen it in long-term debt yet. This week was interesting to me because it said people might be starting to wake up. You're starting to see headlines about selling treasuries. You guys were just asking about that. Could it be the time? Maybe this fall.
Katie, just one more question. The 6%, the number 6, that gets a lot of attention. Is that actually a call from you? Is that a forecast?
No, we don't forecast, but we do see trends in data. And if you look over longer term horizons, 6% isn't a crazy number for a 10-year. I know it is for those of us that have been living in, a decade of really low interest rates. But those of us who look at the technical signals and long-term historical patterns, what you see is that that's not a restrictive rate for many periods in economic history. So it's not strange to think that we might have higher rates if we have surprises on the upside in inflation in the fall.